You had a shareholder who asked you a question about gold over the weekend, and your response was pretty interesting. Berkshire versus gold. You want to talk about how that's performed over the years?
Yeah, but we can go beyond that. But certainly, when we took over Berkshire, Berkshire was selling at $15 a share, and gold was selling at $20 an ounce, and gold is now $1,600, and Berkshire's $120,000. But you can take a broader example than that. If you buy an ounce of gold today and you hold it 100 years, you can go to it every day, and you can coo to it, and you can caress it, and you can fondle it, and 100 years from now, you'll have 1 ounce of gold, and it won't have done anything for you in between. If you buy 100 acres of farmland, it will produce for you every year. You can use that money to buy more farmland. You can do all kinds of things. For 100 years, it'll produce things for you, and you still have 100 acres of farmland at the end of the 100 years. You could buy the Dow Jones Industrial Average for 66 at the start of 1900. Gold was then $20. At the end, it was 11,400, but you'd all gotten dividends for 100 years. So a productive asset of any kind, a decent productive asset, is going to kill a non-productive asset over time. Now, in any given 1 year period, 5 year period, any asset can outperform another asset. Tulips.
Why don't you? All right, welcome to episode 6 of Invest Info, and we're going to be responding to Warren Buffett's comments saying gold is a silly investment. Warren Buffett, one of the greatest investors of all time, mentioned the fact that Berkshire Hathaway, when he started, was $15 a share. In this video, he said it was $120,000. It's an older video because currently today, Berkshire Hathaway is being traded at over $300,000. We could look at it right now. So let's go to it. I have a few stocks I want to look at. Let's look at Berkshire Hathaway, as he said. It doesn't have the maximum of when Berkshire Hathaway started, but you can see Berkshire Hathaway is trading at $318,000. Now, most investors, it's a common myth, as Phil Town would say, they don't really put too much in gold. Now, you do have also legendary investors such as Kevin O'Leary and Ray Dalio, which has beaten Berkshire Hathaway in terms of rate of return. Ray Dalio does put gold in his all-weather portfolio, and I'm going with the side of Ray Dalio. Now, what does Warren Buffett mean that gold is not a productive asset? Well, gold doesn't produce cash flow, right? Gold is not going to pay you out a dividend, and the price fluctuation of gold, it's based on the economy. If you were buying gold when no one wanted it, pretty much in March when the economy was doing good, the stock market was doing good, right before the crash, gold went down, but then it boomed up, and that's how it really is. It moves upon fear, speculation, and I'm with Ray Dalio in the fact that I do hedge my portfolio, and we recommend hedging your portfolio with gold stocks. Let me go to another gold stock here, for example. I'm going to go to, let's go to B2 Gold, right? A stock that I'm not going to say if we have exposure to it or not, but just something I want to show you something about B2 Gold. We did have exposure to it, I'll say that. But again, when we buy stocks, we're not buying lottery tickets, we buy companies. And I looked at an interview with the CEO, and he mentioned the fact, he said, do you buy gold? They asked the CEO if you buy gold, which would he prefer? He mentioned buying gold stock and then using again, remember, we touched the interest, not the principal, the money we made on the gold stock to buy actual gold, to preserve the wealth, right? I'll show you something about B2 Gold. B2 Gold recently started paying out a dividend. Like the management, I think it has a good moat around it. All the things we look for when we go, again, to buy companies, to invest in companies, it checked out. Good moat, years of experience. And I want to show you something. So this particular stock, at one point, they don't have it here, but it was trading above like 66. It fell to about 60 something cents, its lowest point in 2016. And over the 4-year period, it pretty much went from $6.66 to over $6. Really went up to $7. We bought it at a certain point, and the reason I want to make this example is we put a certain capital in there, and got out way too early. But if we'd have bought actual gold, right, you would have got back more on your money buying the gold stock. Why is that? Why is buying gold stock you get more? Because gold stocks are leveraged to gold. You know, you have certain that are more leveraged than others. You look at this one, Kirkland Gold, proving that the gold stock that you pick does matter because it's a company. As you can see, this one has not been on a straight uptrend. It's fluctuating up and down because what the business do with the revenue of the stock is going to also affect the price. So when you're investing in a gold stock, you don't want to just buy it speculating. You want to, again, do your homework and understand what you own. Now, to Warren's case, Berkshire Hathaway did increase. It compounded. It's an asset. You know, it's a business. So we know that compared to all value forms of investment, stocks beats out real estate. It beats out gold in terms of rate of return on your money. Now, however, the thing about gold is gold's been around for over 6,000 years and it never hit zero. How many different corporations or companies have hit zero? Many different businesses went to zero. So in terms of moat, which is an advantage, gold has one of the best moats in history. It won't go to zero. Now there are certain things that gold lack in, such as liquidity, right? You can't really liquidate your wealth in gold really fast. You can't move it around really fast. You take Venezuela, for example. A lot of people during that whole situation over there in Venezuela, the wealthy was trying to allocate and move around their wealth, and it was very hard for them if they had gold, you know, because you have gold bricks you can't bring across the border. So how come a lot of people also went with Bitcoin, right? Because Bitcoin, you know, it's something you can use worldwide. It's a blockchain. Uh, I personally don't have any exposure to Bitcoin. Not saying Bitcoin is a, you know, I can't speak on Bitcoin because, you know, fundamentally, we do practice our fundamentals. We don't invest in things we don't understand. I don't see why Bitcoin can't go to zero. So that's how come we don't touch it. Um, Not saying that certain people don't touch it. If you understand it, certain people that do understand it, by all means. But you know, it seems like a Ponzi scheme. You know, it seems like a greater fool theory. I'm not saying that blockchain is in the future, but Bitcoin itself, I don't see why. You know, there's over 1,000 cryptocurrency. I don't see why that one can't go to zero, right? But going back to gold, right? We're gonna look at some gold stocks. We looked at B2 Gold. We look at Kirkland Gold. I want to show you something. Let's say you don't know what gold stock to pick. You have an ETF. Now, an ETF, electronic traded fund, is a basket of stocks that's pretty much going to track gold. And if you look at it, not the max history. Let's just do a year. You can see it fluctuates. It will dip down, goes up. Now, when everyone was fearful and everyone was buying gold, that's the time we would have been selling gold, right? The best, you know, you buy when others don't want to buy, and you sell when others don't want to sell. A rule that Ray Dalio says, which is not easy. It's simple but not easy. It's just like staying in shape, right? Eat right, exercise, and watch what you eat, right? It's very simple, but it's not easy to do. Not many people could do that. It's the same thing when it comes to investing in things like gold, speculative assets like gold, right? It's easy to buy it when everybody wants to buy it, but it's very hard to sell it when you see it going up and you know. So again, value to be a value to beat the crowd, you have to go against the crowd, right? So we did have exposure to a gold stock and saw it fall from its highs to its low in March. Bought, got out way too early. But the point being is if you want to invest in gold, we would recommend getting the gold stock, which is leveraged more to gold. Take your profits from that and then buy actual gold to preserve your wealth. Because if you look at, if somebody was rich in gold thousands of years ago, all right, he will still have around the same wealth as he did today. You know, I mean, yes, a company could grow, could produce cash flow a lot faster than gold, but there's no guarantee in the future that it won't go to zero. You won't go out of business. Anything could happen. But one thing that gold does have That's how come the author of Rich Dad Poor Dad, he invests mainly in gold. It's used as a preservation of wealth, right? So now I mentioned leverage, right? Now let's look at another leverage ETF. This one is a bullish, two times leverage, bullish exposure. Bull means you think the particular asset or commodity is going to go up. If you're bearish, you think it's going to go down in the future. Let's just go to the year. A year. Here's the thing with leverage. If you're highly bullish on a sector, whether it's gold, technology, you have different ETFs that will track that exposure. The price of the ETF will fluctuate a lot more than the underlying commodity or asset, right? So as you can see, gold itself, it's on a little bit of a pullback from its high, but you can see the chart of the ETF was affected greatly, right? So let's look at March. It fell down during the pandemic, all the way to $20, and it went all the way up, back up to $112. So somebody that's bullish on gold, they don't care about price fluctuation, right? They just see gold as a solid investment, as a way to preserve their wealth for the future, so they won't sell. But if you're trying to make some type of money on the price fluctuation of gold, you often want to buy it when nobody wants to. Other day, invested in jewelry now. Why do I invest in jewelry? And why I recommend investing in jewelry? One, because jewelry, you could always have it on you, right? If a guy like Peter Schiff, very bullish, he always keep a actual gold card on him, gold watch. That way, if you're stuck in the middle of nowhere, you don't know what could happen. You have some form of money on you. You know, your bank account could freeze, right? You might not have access to your trading account. So that's some of the benefits of wearing gold jewelry. It's seen around the world as some form of money. So it has a huge moat. You know, in terms of cash flow, yes, there's other assets out there that will generate cash flow in the form of a dividend, a payout, market appreciation a lot faster than gold. This is true. And there are assets that are more liquid. But in terms of something that won't go to zero, something that will always maintain its value, it's a solid investment. You know, we recommend, again, getting a gold miners ETF, owning a part of a gold miner that you understand, or a silver miner that you understand in the form of a stock. You invest a certain money in there, the payout that you get from the dividend or the market appreciate over time, you could take that additional appreciation, the capital that you gain, and then actually buy gold to preserve your wealth. You know, or silver, or copper, whatever commodity you're bullish on, right? Are you going to beat out Berkshire Hathaway? Can't guarantee that. Are you going to beat out Apple? Are you going to beat out Nvidia and all these other stocks? There's no guarantee on that. Most likely not, because these companies again, when you buy gold, you're not buying something that's going to generate cash flow. It is a speculative asset, right? Going back to buying jewelry now, I was in the pawn shop the other day, and we and the owner of the pawn shop, we were discussing this, and she was pretty much going how, you know, it's pretty much fluctuated by the economy. The economy's doing well, the prices goes down. She had a buyer that wanted to buy this gold piece at a certain price, and then when he came back, he found out that, look, he couldn't buy it because, you know, the value of the pieces went up, you know. And it's so I told her, look, pretty much we're gonna wait on who wins the election, because that also plays a part, you know. That can affect the price of gold. If people are fearful of who's running the country, the price of gold could skyrocket. If they think somebody that's gonna boom the markets up, the price of gold could go down. So if the price of gold does go down, you buy gold. Now if the price of gold go up, well, we're gonna go heavy in stocks and avoid gold for a little bit. In fact, if you think the price of gold is gonna go down, you could invest in bearish ETFs, which goes the opposite way of gold, right? So pretty much if gold goes down, a bearish ETF on gold will go up. So there's different ways to play gold to profit in any direction, and that's truly what we want to do. We want to profit in any direction. We want to find ways to make money in any direction the price of gold moves, right? And whatever profit we make, we buy actual gold to preserve the wealth. Here's an example of this stock right here. Ticker symbol is JNUG. All right, JNUG, and it's a pretty much it's a junior gold miners IDX bullish 2x exposure. Again, when you have a 2x exposure to a commodity or asset, you have to remember, if it moves a little, it's going to fluctuate that portfolio a lot. It's going to fluctuate it a lot. You know, so I think it's best to wait to see how this current election plays out, because look, if Joe Biden wins, he plans to increase corporate taxes. That's going to cause a lot of investors to invest elsewhere, bringing down the stock market and boosting the price of gold. So in that case, you know, you buy gold miners ETF. If President Trump wins, you know, he's a stock market guy. You'll see a pullback on gold, and that's the best time to buy it, on a pullback. When others don't want it, that's when you buy it. If you look at the actual price of gold throughout the years, spot price of gold, you can see what you have a period of time where gold could spike up. You have a period where we could sideways, as you can see from the 80s to about 2000, gold didn't do much. It didn't do much of anything, right? And then from 2001 to 2012, it shot up, went back down, it goes up again. This is gold. This is what it does. You know, the price, which the price can be manipulated, it relatively preserves your wealth. But in terms of producing cash flow and getting a payout for gold and the price movement of gold, we'll recommend getting the ETF, or getting an ETF, buying gold companies, gold mining companies, to get a better gain out of the market price movement of gold. Then you take that particular gain that you made from your investment, from owning that miners, and then you buy actual gold to preserve the wealth. And the reason Ray Dalio puts gold in his all-weather portfolio, some type of exposure to it, is if your portfolio is dipping during, for example, a market crash, guess what your gold stock is going to do? It's going to be going up. So when most assets are going down, most companies are going down due to fear, whether it's a black swan event like COVID-19 or 9/11 that brings the market prices all the way down, out of fear, gold stocks will shoot up. Okay, so when you buy a gold ETF, you buy a gold stock, you buy gold itself, you could also prepare your mind that this thing could go sideways for a number of years, that it might not move. You know? But if you get a good gold company, for example, we mentioned B2 Gold, where they're expanding, they're growing. Okay, the gold stock itself, the gold company itself, could go up independently of the price of gold, because of what? It's a good business. So that's the first thing we want to invest in. We want to invest in a good business. When in terms of gold miners, silver miners, we want to make sure it's a good business. The company is growing, good management. All right, that they don't leverage themselves too much to the price of gold, that they're just trying to expand their business first and foremost, and hedge our portfolio against any type of crisis situation. So I think that's my response to Warren Buffett's comment on gold being a silly asset or silly investment. It doesn't produce cash flow. That's understandable, but it's a great hedge in your portfolio against any situation such as a black swan event. All right, hope that was educational, and I'll see you on the next one.